Hey everyone, it's Daniel here from InfoS. Hope you are all doing well. Want to talk about today the US midterm elections and what does that mean in terms of the stock market. Now, there's a lot of predictions one can make about the markets, especially short term, but thinking about more medium long term, what does the implications look like when you have different parties controlling either the Senate or the House within the White House, right? Now, before I get into that, right now as I speak, the results of the midterm elections isn't confirmed yet, right? We still have a couple of more seats, but it looks like you are seeing Republicans dominating here. As I speak here on a Wednesday, and it is the November 9th around 1:54 p.m. So it is looking like they are taking majority of the seats. Senate looks very tight. House, you're having majority of that red wave. Now, what does that look like, right? Let's run three possibilities, three scenarios. One is either you get the Democrat complete sweep, which is looking like unlikely, but we'll still talk about it. And what does that mean for the markets? What does it look like if you have a Republican takeover where the Senate and the House, you see a complete takeover of the Republicans? And then the third one where you have kind of a gridlock, where you have, okay, the Senate being controlled by Democrats, but the House being controlled mostly by Republicans. So the first ones for the first one, the Democrats controlling it all. I mean, again, looking less likely here, but the House and the Senate completely being taken over by the Democrats. That would basically wouldn't change anything in terms of the policies, in terms of government wanting the Democrats wanting to spend and help I guess consumers with this inflation issue. Now the thing is, if you're spending or giving checks out, it's not really going to solve the inflation issue. It's just going to make it worse off. So the markets may not actually like a Democrat sweep, right? So if that happens, then for sure you could see some sell-offs in the equity markets because more stimulus is not good, which means Fed needs to tighten more, which means we need to combat inflation harder. And on top of that, also, let's not forget that the tax plans and the tax ideas that Biden has is also negative for the markets as well. So spending, inflation plus taxes may not be good, and you might see equities sell off on that idea. Now, if you get a Republican kind of win, a Senate and the House, right? You could argue that initially that may be good for our for equities because that means the policies that the Democrats have completely throw that out the window, the tax plan completely throw that out the window, the spending plan completely throw that out the window. However, I think that will cause a lot of uncertainty within the White House, within Congress, and it will really cause more animosity within the White House, and you could see potentially um, Biden get in trouble, or maybe the Republicans going after Biden and possibly trying to impeach them the same way when Trump was president and the Democrats were trying to get after Trump in terms of impeaching him, and they may go after Biden based on a couple of things, like for example his son Hunter Biden, the issues with the laptop and whatnot, and that uncertainty may not be good for the markets down the road, right? Even though maybe initially may cause some optimism, just because of the policies from the Democrats may not be fully agreed upon by the markets, but later on down the road, you could probably see some tensions rise up, uncertainty in the White House, which would again probably result to selling. Now, the third one, which is more likely, which is looking like it's going to be, is the House being taken over by Republicans and some sort of split in the Senate or a little bit small, majority win in the Democrat side in the House, kind of creating this gridlock scenario. And this gridlock scenario would basically mean that, okay, you have these policies out there, the spending plan and the taxes, but it's not, again, not really going to go through that easily, or maybe not at all, which again, short term, we could see markets move up on optimism on that. However, the other side you could look at at that trade is, or that, idea is that it's already priced into the markets, right? So really a gridlock, um, if there is some sort of optimism in the equity markets, then I would say it would be short-lived because it's kind of priced in. That's what markets are expecting. And yes, it would derail that spending plan, which means good. Do nothing from the fiscal side of things, right? Don't tamper in with your ideas of spending and stimulating to cause even higher inflation. So that's a good plus point. Plus point also not going hard with the taxes as well. Another plus point. But medium term again, if the fiscal side nothing's happening because the government's a complete mess, then guess what? The markets are going to think about what is coming up in terms of the data, the upcoming data, the CPI report that we have this week on Thursday, and most importantly, focus mostly on the Fed, which would make, I guess, trading more clear, which would make the direction more clear until we get to 2024 when we get the elections again and see where, what the government looks like at that point, right? So you can make a lot of estimates and guesses how it would look like in 2024, but as of right now and as of next year in 2023, you can expect the markets going back, focusing on, again, earnings, focusing on how these tech companies are doing, the layoffs that are happening, especially with Facebook, or I should say Metaverse, or Meta, I should say, where they have decided to lay off about approximately 13% of their workers, of their staff, and that continues to be the theme, continues to see tightening in the markets and tightening from the Fed, which is putting this shadow, these dark clouds over what growth can look like in 2023. So for that, that's where I think the markets would then keep an eye on, or shift their focus on after all of this political mess, or this midterm elections is done with, right? And I'm not saying you can't get selling as of right now. We are seeing selling today in the equity markets, and I'm not saying that we're going to see a rally all of a sudden, right? But I'm saying the shift of the focus, right, once that is done, is okay, especially if you get a gridlock, is okay, where are we heading with rates, with the Fed? What's the plan there? Because we know fiscal side, not much isn't going to get done, but on the monetary policy side from Federal Reserve, we know that's where the focus is, right? So the sell-off that we're seeing today, will it continue? It was quite a battle today if you look at the markets, the up, down, the swings. A lot of negative news coming out from crypto, especially the FTT coin just basically dropping 70%. The biggest exchange, FTX, looking basically going under. Having its Lehman moment. The crypto markets looks like it's having its Lehman moment. And Binance just recently, rumors coming out saying that they're going to probably pull out of the, possibly buying and saving FTX. So let's see what happens with all of this. Definitely doesn't look good for the crypto markets. Definitely the political, the midterms sentiment plus the crypto sentiment is putting this downward pressure, Could we see a December Santa Claus rally? Could we see a rally in the equity markets? Sure. We still have CPI. We still have data. We still have the Fed coming up in December. So there's a lot more to look forward to. But these are the three scenarios we could see with the likely chance of the gridlock. Again, I could be totally wrong of where this could head to in terms of the markets, but I do foresee medium term the focus start to die out from that fiscal side, because again, nothing will probably be pushed out, especially on the gridlock, and more focus on the Fed, which means that, if we do get a squeeze, if we do get a rally, that rally will probably be in the equity markets be short-lived. So, I do invite a rally. I do invite, why not let the equity markets squeeze. It could be for anyone who's bearish on the markets, want to play a tactical role in shorting equities or shorting or getting or readjusting positions, could be a good opportunity to get on that squeeze. And we'll see what happens in 2023. Anyways, leave a comment below. Let me know what you guys think. Subscribe, hit the like button as well, and the bell icon to be notified on the next video. And I'll see you guys around. Cheers. Bye.